Hi everyone, Scott Kinne here, First Heritage Mortgage. Our first video of the new year. Today is January 9th, 2015. Happy New Year to everyone. Hope you had a great holiday. Sorry if I've been hard to reach here lately. I, like many others, have been fighting the flu, as everyone else in my family has, but I'm now getting over it. Just want to let you know, here's a couple quick updates. Very important things. 2015 is shaping up to possibly be a fantastic year. What we have going on today. Today, FHA released their announcement that they are dropping the FHA mortgage insurance monthly rate factor. So currently, 95% FHA or higher loan to value requires 1.35% mortgage insurance factor. They are dropping it 0.5% down to 0.85. So that is great news. All of their factors are basically dropping by 0.5 point. So that puts it more in line with conventional financing. Now the difference between do I go conventional or do I go FHA is the fact that FHA allows for lower credit scores without really impacting the interest rate as much. So now that their mortgage insurance premiums come in the line, it's going to be a great program to help people. Again, conventional is going to hold it between a 45% debt to income ratio, whereas qualified mortgage guidelines come more into effect, could go down to 43. FHA right now still has their waiver that allows higher debt to income ratios per the automated underwriting system, which right now typically goes to about a 50% debt to income ratio. So when clients are trying to get approved for the highest amount possible, FHA is a great option. So that's where FHA stands right now. That's for any FHA case numbers pulled on or after January 26th. But anyone who's had a loan typically taken out FHA and pulled a case number in the last 30 days, FHA allows us to basically cancel that FHA case number and reissue a new one after January 26th with the new lower mortgage insurance premiums, the monthly premiums. So that is great news, especially for anyone that thinks they got locked out of it. No, they can still get into that lower FHA. The second point that I wanted to make was the 97 conventional loans. They are back on the market. They are excellent. Right now I'm doing a number of clients on the 97% conventional with LPMI. If you've got excellent credit scores, 750 or above, then you can get LPMI, lender paid mortgage insurance. So you can get a rate of around 4.5% at 0 points with no MI, with only 3% down. Great option and a 45% debt to income ratio. So that's the second great thing. Third great thing, our CRA, Community Reinvestment Act program, is still available. It's extended past December 31st. That's a program that's running at 4.25%, 0 points, I take that back, 0.5 point, and no MI. And that program has a limitation on income. You can't make more than $86,500 per year on household income, and it holds you to a little more restrictive 43% debt to income ratio. So the new conventional 97 competes fairly favorably with it, but that CRA, you can't beat it. There's nothing in the market that beats it right now. So that's where we stand on new programs that I want to make sure you're aware of. There's also a lot of talk in the market about the new appraisal requirements that are coming out that are going to be effective at the end of January. No one's really sure what's taking place. My belief is that it's going to be very much like what we have now, a desktop underwriting type system that gives a valuation for a property. And if that valuation falls within a certain range of the actual sales price, then it's really not a problem. If the valuation says, gee, this house should only be selling for $250 and it's selling for $350, then it's going to require deeper understanding of why that value difference. I don't think it's going to have as big an issue on this market as a lot of people are anticipating, but we've got to wait to learn a little bit more about what's truly taking place and what the confines are going to be, what the requirements are going to be. I think it's all going to be automated, but we're going to see. Hopefully it doesn't slow down any transactions. Lastly, update on what's happening in the mortgage bond market. The bond keeps defying gravity and keeps increasing. The bond price here on past Wednesday hit its highest price that we've seen since May 23rd of 2013. So again, as the bond price goes higher, mortgage rates go lower. So rates are excellent. We were looking at VA rates around 3.375 at 0 points, 3.92 APR on a conventional, and that is actually, I take that back, on a high balance $600,000 mortgage that I ran for a client. So rates are great right now. Great time to get this out to your buyers. Let them know, buy a house. In fact, my own daughter's looking to buy a house. We're looking right now. The market seems pretty hot. She's trying to buy in the mid-high 300 townhouses in Fairfax County, and she's put in a couple offers, and those offers have had counter offers. So we're starting to see, even though we're early in January and really cold January, multiple offers being made on good townhouses that are priced well. So just thought I'd let you know. The bond is looking great. Check out the bond chart to the side. My rate sheet's also there. Check it out and let me know if you need anything from me. Just to give you a heads up, I am headed out of town on Monday. I'll be out all next week, but my assistant Samantha will be here in the office taking all my calls, answering any questions you may have. She is excellent, as most of you who have dealt with her know. I'm headed off to our President's Club trip for the top producers, so I'll be living life in Jamaica while things are below freezing here in Northern Virginia. So don't hate me too much. I'll be thinking about you. If you have any questions, let us know. And otherwise, have a great